Hey guys, Akil Stokes here. Welcome back to another midweek markup video. If you guys are brand new to the channel, I'm a Forex trader, a trading coach, one of the co-founders of Tier1Trading.com, and this is one of many videos that I put out here on this YouTube channel throughout the week, hopefully giving you content that will push you in a positive direction when it comes to your trading journey. These midweek markup videos are usually short and sweet, so the longer ones come on the weekend where we're providing all these cool little lessons and they're maybe 30 minutes long. This, I want to get in and out in maybe 5 minutes if I can stop myself from talking too much. But today we're going to take a look at an opportunity really for day traders, but show you how higher time frame analysis plays a part in that. And what I want to do with my day trading, and this is my kind of way of day trading when I used to day trade, is I want to do an overall screen of the market. And that overall screen of the market starts on the higher time frames, meaning that I want to look at the higher time frames. I want to go through the same IPDE process, identify, predict, decide, execute. I want to look for pairs that have opportunities to move in a directional way. And then I want to kind of, screen those pairs essentially, look at my best opportunities and then focus on them for an intraday session. So imagine me starting kind of the beginning of the day, doing normal top-down analysis. I'm jotting down which pairs have room for intraday movement. And then once my day trading hours start, I'm locking in on those specific pairs, looking for the actual signal. And if you guys are on the platform and you want more of that, we have a course dedicated strictly to day trading, which explains that in more detail. But here's an opportunity right here on the New Zealand yen, because if you look at New Zealand yen, we've had a lot of directional movement, right? We've yen and Aussie pairs have been on fire of late, and you can see that we've had this big bullish breakout. So I can identify the higher high, higher close. I can make the prediction that we're likely to go higher. The next part of that prediction is me asking myself, if we go higher, where are we likely to go higher to? And this is where I like using this tool. And this tool is very helpful, not just if you're new and you don't know how to identify structure. I got this question after last week's video, which is why I kind of want to bring this to you here. But also so you're not forgetful. And obviously I've been doing this since 2007, so I'm pretty good at identifying levels of structure. But sometimes I do get lazy. I forget to look left or look left enough, and I get caught off guard by levels that I should be paying attention to that I'm not. And this is where this VS1 indicator comes in handy. So I'm going to go up to my top toolbar right here. Just want to push zones on, because typically I like a nice clean chart. And it's going to bring my attention to the key levels that I need to pay attention to. So you can see that we just violated one right here. However, we have another looking left, structure leaves clues, and an even higher one looking left, structure leaves clues. And that basically gives me a prediction point of where I think price action can go. So looking at the bottom of this most recent zone, being conservative, that's going to be about 80-20s. Now, looking at where we're at currently, 81.72, we were a little bit before that during the day, and projecting that we can go to 82.20s, right? That gives me a pretty good margin as a day trader. That's a pretty good range, about 50 pips of potential profitability. So as you go down to a range bar chart, and a range bar chart is it's a tick-based chart. It's a little bit of a different look than a range bar or than a minute-based chart. So if you can imagine, a minute-based chart prints a candle every blank minute. So a 5-minute chart every 5 minutes, a 1-minute chart every 1 minute. A range bar chart prints a candle every time price moves out of a specific range. So this is an 8 range chart. Ignore 80. You got to do to 0 because there's stupid little micro pips or whatever they're called. But this is an 8 range chart, which means each of these candles on this chart is exactly in the range of 8. A new candle is only printed when it moves out of that range. And I like these charts. And you could do tick charts, you could do Renko charts, you can do there's all other type of charts like this. I prefer range bar charts. They're my preferred one, but it's up to you. But I like looking at them because they typically give me a quicker and in many cases a cleaner look than going down to a lower time frame chart. And it allows me to see different ebbs and flows and different actions in the market that I may not see on the minute chart. Now, don't get me wrong, I bounce between both. I always look at the minute chart first, and then I go down to the range bar chart if I need more clarity. But I suppose you can just look at one the entire time as well. I kind of like having more information because you can make better decisions. But anyway, what we've done here, we've been doing this the last 2 weeks or so, in the live trading room is we've actually put on an indicator called the daily chore. If you've been a part of Tier 1, obviously you know about it. If you've been to any of the workshops, you've probably heard about it. But the daily chore is a strategy that is usually used on the daily chart, right? It's a chart that's on the daily. It gives you a signal. You're supposed to be in and out. One of the reasons many traders flock to it because they work full-time jobs. They don't have a lot of time to look at the chart. So they're like, hey, if I can look at something once a day and get a signal or not, that fits right into my lifestyle. And as traders, we want to fit our trading around our lifestyle until we have the opportunity to change our lifestyle. But I don't know how we got it down here on the range bar chart, probably some talk about strategy development, but we've been looking at using the daily daily chore here on the range bar chart as a reason for entry. And you can see this can lock right in line with our kind of our higher time frame prediction. So if our prediction on the higher time frame is that we're likely to go to 82.20s, that gives us a range all the way up to this level. So that means I'm looking for buying opportunities until we get up here, right? And as soon as we broke this level of structure, going through our normal structure rules, and if you don't know them, again, watch last week's or this week's weekend trading edge video. We talked all about rules for violation of structure. You can see that once we get past this level of structure, this is where we're really going to start eyeing up on these signals. Yes, there was a signal right here. I wouldn't care about it because we haven't violated structure. But once we violate structure, now this could be an entry reason. We actually just got triggered an entry reason right now. And as long as we ebb and flow, you may get more and more entry reasons. The point is you're looking for these signals, these entry reasons, until we get to our ultimate destination. Once we get to 82.20s, the move has been made. We're no longer looking. But the difference between this and the regular daily chore is that instead of looking for a target right here and a stop right here, right? Because we've made that higher time frame kind of observation, we're looking at this kind of in a different light. All of a sudden, our stop loss doesn't really change too much. Our stop loss is going to be the same. You can draw it in for you, going to be right here. But now all of a sudden, that target, right? Instead of being right at the top of that green box that's already printed on your screen, that target is going to look more like, oh, wrong button, more like this. And that is an amazing opportunity. And of course, you can actively manage that trade as it ebbs and flows. If you're familiar with how we actively manage things, and again, I apologize. I try to keep these YouTube videos as simple as possible, so not to confuse and intimidate, but understand I'm typically working with a set group of traders every day on the platform, so I kind of bounce back and forth between using terminology and talking about stuff as if they understand it and you guys don't, or you guys don't. I'm trying to find balance in how I speak, so I apologize if I say something that doesn't make sense and I don't explain it. It's just always hard for me to kind of talk to both parties at the same time. But essentially what you can do here is you can actively manage this trade as it goes up. So your initial stop loss starts here. As we ebb and flow, right, you already would have locked in profits. If we put in another higher high, higher close, excuse me, you can lock in more profits. And again, just see if this reaches its ultimate destination or see if you get stopped out for profit. So we don't need to get into the specifics about how to do it. There are many ways that you can manage this trade, many ways that you can take it. But I want to give you an example of how the higher time frame analysis could be very beneficial even if you're a day trader.